Thanks, Steve. Good evening, everyone. I welcome you all to the Q1 FY21 earnings conference call of Salasar Techno Engineering Limited. On the call with me is Mr. Pramod Kala, Financial Officer of the company, and Pareto Capital team, our IR advisors. We hope you all families are healthy and safe in these times. The countrywide lockdown in March 2020 disrupted the demand and supply chains, impacting businesses across the sectors. The performance of your company too has been impacted by the extended lockdown and resultant economic impact. We have started seeing the momentum picking up, with our plant operations having resumed operations phase-wise from second week of May. The issues around labor availability and supply chain are also gradually under control now. Also, we are strictly adhering to the social distancing and sanitization guidelines, keeping the safety of our employees as our top priority. Before we get into the financials and business performance for the quarter, I would like to start by giving you a short overview about the company. Our journey began in 2006 as telecom tower manufacturers, and over the years we have grown by diversifying into other business verticals and expanding our operations in various parts of India. Since inception, we have supplied and erected more than 45,000 telecom towers of various designs to all leading telecom players, and we share a very good business relationship with each one of them. Our technical collaboration, a Danish company, enabled us to emerge as one of the key players in the manufacturing and fabrication of telecom towers. The collaboration has helped us provide our customers with lighter and lower costing tower structures. We are a preferred telecom vendor and tower supplier today for all major telecom companies and enjoy a sizable share of the market. Over time, we have diversified our manufacturing and EPC capabilities into other infrastructure, including power transmission, railway electrification, solar module mounting structures. We also manufacture at the same time high mast poles, smart city poles, stadium lighting poles, flag masts, and other utility poles. We are a approved vendor for Power Grid Corporation of India Limited. The company has already executed more than 475 kilometers transmission lines of various state electricity boards. We are also an approved vendor for Central Organization for Rail Electrification, that is CORE, to supply track electrification structures. We have executed railway track electrification of about 217 track kilometers in our own capacity, apart from supplying structures to various other EPC players. In terms of manufacturing capability, we have 3 state-of-the-art steel structure manufacturing and galvanizing facilities in district Hapur of UP, which is near Delhi, with a total installed capacity of about 100,000 metric tons per annum. Now coming to the performance during the quarter, on a consolidated basis, the company's total income for Q1 FY21 stood at 63 crores. COVID-19 pandemic and the lockdown has been the main reason for the degrowth in sales this quarter. The EBITDA stood at 5 crores. The EBITDA margin for this quarter stood at 7.6%. PAT for the quarter stood at rupees 20 lakhs, with the PAT margin being 0.3%. At the same time, we are glad to share that we have received good orders during this quarter. We won an EPC order from Haryana Vidyut Prasar Nigam Limited, that is HPPNL, for construction of transmission lines in Yamunanagar and Ambala area, worth rupees 28.7 crores. Another EPC order of rupees 27.2 crore from UP Power Transmission Corporation for construction of hybrid substation at Jewar on a turnkey basis. I'm happy to share that we have also secured a 2-year supply agreement with American Tower Corporation, that is ATC, Africa, for supplying of towers in 5 African countries, which are South Africa, Kenya, and Ghana. At the same time, I would also like to share that a part of this agreement, during the beginning of the second quarter, we received first order under this agreement to supply 189 telecom towers to Nigeria, which went around rupees 18.5 crores. We are very confident of the opportunities in our focus sectors. The increasing mobile penetration in India, the data consumption, as we have seen during the pandemic, is expected to boost telecom infrastructure development in the sector. Huge investment in telecom tower structures is expected by telecom companies under the 5G rollout scheme. And also, there is a very active push to increase 4G penetration in India all across. There is an increased demand for power consumption in the country. The current transmission structure and regional power demand supply gap are expected to provide favorable opportunities to transmission line EPC players like us. Not only this, 100% railway electrification target of the government has also shown from orders in railway electrification sector. Overall, we will mark the industry, and our focus remains on increasing our market share and providing quality products and services to our clients. Confident that COVID will have a limited, I would say only a limited impact on our business moving forward. We'll continue to bid for projects internationally and India. We are strongly focused on rationalizing our cost structures across the organization and getting out of this storm to emerge stronger. This is all from my side as of now. I would now ask the moderator to open the floor for the question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Muskan Solanki, an individual investor. Please go ahead.
Yeah, hello. Am I audible?
Yes, ma'am.
Yes, very much.
Okay. Hello, good afternoon. My question was regarding the railway orders. Just wanted to understand what is the current standing right now, and what will be the payment cycle associated with them, and how much orders are you expecting to execute in the current fiscal year?
Well, right now, the railway orders which are under execution are of value about 63 crores, wherein the work is already going on. And out of this, expecting a revenue of at least about 50% this year, and part of which, part of the pendant order will be coming next year.
Okay. And sir, I mean, going ahead, once the railway electrification has been completed, what will be the next plan of action?
See, I think that is a very long shot. Railway electrification is not going to be completed in a hurry. It is at least a 10 years project of Indian government. I mean, today, the railway electrification which we have done, at least, 40% is still unelectrified.
Right.
So if you look at the total India scenario, at least 40% of the tracks are still unelectrified. So, I mean, it's very difficult for us to say that, this 40% which is pending, which is close to, I think, more than 50,000, I'm not sure about the kilometers as such, but it's a very, very, I would say, too early to comment on that.
Right.
And
Understood.
yeah.
Right. Of course.
Yeah.
Continuing with this line of, new segments, and what do you think will be the, so what is the current status of the manufacturing of road and railway overbridges that you will be getting into?
Ma'am, we have actually just finalized the plan to set up that facility, wherein the work on the construction of the shed has already started. And we have finalized the orders of the machines, almost all, barring a couple of few. And these machineries will start coming in, December onwards, which will take another couple of months for installation. So by March end, we should be ready for production, for trial production. And we expect that the, full-fledged production could start in next financial year. And it should give us at least 80 to 90% of our installed capacity production.
Okay. And sir, what is the capex planned out during this period?
The capex plan is about 20 crores in plant and machinery, wherein apart from land we already have in our existing facilities. So we are just constructing a shed of about 100,000 square feet for this particular purpose, and the machines, as I said, are all being.
Okay, understood. Thank you so much. This has been really great and helpful.
Thank you. You're welcome.
Yeah.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Kalpesh Goti from Valentis Advisors. Please go ahead.
Yeah. Good afternoon, sir.
Good afternoon, Kalpesh.
Yeah.
Please go ahead.
Can you throw some light on what kind of fixed expenditure we able to cut down during COVID period? And, even after opening the plant, do we see some kind of cost cutting will be remaining Q2?
During the COVID period, to say, the March, the lockdown started on 22nd of March, right? Which was almost at the fag end of the last quarter. So basically, in March, there was hardly anything for us to do. But in the first quarter of the next financial year, that is this year, there was some salary cut were done for a period of about 1 month, where the operations were totally closed. The plant was closed. There was no work, hardly. And beyond that...
Mr. Agarwal?
Can you hear?
So sorry to interrupt. Your voice is breaking up in between.
Is it okay?
Yeah, this is better.
Yeah, fine, sir.
Okay, yeah. So, Kalpesh, basically, there was not much room for us to reduce the fixed costs, so to say. Apart from that, we could ask the employees take a bit of salary cut for a small period. So there were people who took salary cut in the month of April, and the May, first week, later of first week or the second week of May, we started getting permission for running the factory, and people started working. And now kind of there's hardly anything which you could actually do from home. Can't work from home. So most of the people had present in the factory for manufacturing and other operations. With respect to the fixed costs after the operations have started, I would say there's hardly anything we can do about it. Apart from cutting down on, of course, that which have cut down on, so like the travel expenses have reduced. Okay.
So
of travel restrictions in place. But at the same time, if we look at the finance costs, which are also kind of, I would not say these are fixed costs, those are more related to the manufacturing and the working capital. Those have slightly come down because of lower utilization of working capital limit, as well as lower rate of interest which we've been able to get from the No, thanks. I'm happy to inform that our finance this year overall would be down by at least 10%. I would say, like in terms of last year finance cost for more than 20 crores. This year, I'm expecting finance cost to remain within 18 crores, anything between 17 to 18 crores.
Okay.
Yeah.
So what kind of, remuneration cut took by the management team?
Management also took salary cut at the same level at which other people took, which was almost 40% during the COVID period. And also all the increments which were supposed to be done this year have been put on hold. Nobody is taking any increment this year, including the management.
Okay. And so I want to know, in your plant, what was the count of the labor pre-COVID and what is now currently?
You mean the labor headcount?
Yeah, labor headcount.
See, in a pre-COVID condition, we were working at about 300 of labor headcount. And as of today, we are at about 1,600 headcounts.
Okay.
Yeah. Pre-COVID, we were working with about 1,600 headcounts with respect to the labor alone, which is today is about anything between 1,200 to 1,300.
Oh, that's great.
Yeah. So see, most of the labor who work with us are mainly in the local areas. So those people have been able to come back without much of a challenge. And I would say people who had actually migrated to their hometowns, we have made some arrangements to bring them back, by hiring a special vehicle. So more or less, we are on a labor front, we are comfortable. I would not say that we are operating at 100 capacity, but we are operating at a reasonably good capacity.
Right. Even, sir, now, you said almost all of your plants started and working at pre-COVID. But what kind of challenges still you are facing in Q2?
In Q2, as such, there is only uncertainty because of COVID, whatever could come up, which is unseen. It is fear of unseen, I mean, tomorrow nobody knows what's going to happen tomorrow. Suddenly something comes in place, it does the whole thing again. But beyond that, as of now, we are working, as I said, more or less at the similar levels as we were working pre-COVID. Though the labor is less, but we then, I would say, a little stricter controls and, probably better efficiency. That is the reason that even with slightly less work, we have been able to achieve.
Mr. Agarwal?
Yeah. Can you hear me?
So sorry, your voice is breaking up.
Kalpesh, did you get my answer or should I repeat?
Yeah, partly. Can you share what's your utilization in Q1 and what is now in July and August?
In terms of manufacturing?
Yeah, manufacturing.
Okay. See, in Q1, if everything was okay, if there was no COVID, probably we would have dispatched close to 15,000 tons odd of structures, right? Whereas we were able to dispatch only about 8,000 tons. Right? Yeah. Okay. And yeah, so I would say that the number of working days which we lost in Q1 was about 40-45 days. And even when the operations restarted, we were working with very small labor because there were restrictions in place to hire people. You could not have more than certain number of people in the plant because of the health issues and all those restrictions. So it was quite a while, I would say at least about 10 to 15, 20 days wherein we were operating on a very lean capacity, right? And it's only in the month of June that, we started manufacturing full-fledged. So today, July and August, I would say we are operating at almost full capacity in terms of manufacturing. I think that answers your question.
Yeah. So, we can say Q2 will be now at the pre-COVID level?
There's no reason that, if no surprise comes up in the month of September, our Q2 should be at the pre-COVID levels. You're absolutely right.
Okay, that's great. So, Two more questions, sir. One on the order book front. What is your total order inflow from April to August?
Okay.
And second question, can you throw some light on the, on a telecom business? Did you got any fresh orders?
Okay, I will talk about the total order book and then we'll talk about telecom. So right now, for EPC, we are executing orders of about 320 crores, which are being which the execution stages. Confirmed orders we are executing under different stages. Some have just been started, some and some have been completed 10%, some have been completed 50%, and some even 80%, 90%, right? And all these 300 crores orders would, in different stages, would be completed within the next 18 to 24 months, gradually. For telecom in particular, telecom is an open order book for us from all our customers, apart from export orders. So, as I said in my initial opening call, that we got almost 20 crores order from FTC Nigeria. American Tower Corporation is one of the largest tower companies in the world, and they're present all over the continents in the world. They are in India also. There are customers in India as well. For operations in 5 countries in Africa, we made an agreement with them, supply agreement with them for 2 years in the month of June. And in the month of July, we got first order of 189 towers. It was about 13.5 crores at that time at exchange rate. And we are also again in talks with them for future orders. As you know, this agreement is for 2 years. So this was only for one country, for Nigeria. We are talking to them for other countries now, for Ghana and Niger as well, and Uganda. Apart from the export orders, I'm happy to for ATs. I'm happy to share that we have also started our relationship with Airtel Africa again. We supplied towers to Airtel Africa during 2010-11 when they had gone to Africa, and then they had stopped buying towers because they've sold their tower business to American Tower and others, and not buying. But recently they started buying it, so we got a trial order from them last month. It's a very small order, but the relationship has again started. For the domestic players, we are industry leaders in telecom towers. We hold number 1 position with Indus Towers, Bhartel, American Towers, Reliance Jio. So we're playing market share position. And these all orders from telecom companies are open orders. I mean, they give you a projection, a LOI sort of a thing, for next 2 months, that okay, they'll be buying roughly these many towers this year, and the purchase orders actually comes, whenever there's site ready to be installed. So this is how it happens.
Right. Thank you, sir.
Thank you. A reminder to the participant, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of R. Vedajna, an individual investor. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
Hi. I just wanted to add a couple of questions. So the first one, debtors. What is the outlook on debtor days, and are there any stuck or slow-moving debtors that we see?
Yeah. Okay. See, there is no debtor which is stuck, so to say. But yes, there are some debtors which are slow-moving. which are, of course, the debtors from the government, which are mainly our rural electrification jobs and UPPTCL jobs. Today, we have a debtor position as on Q1 FY21 of about 212 crores, out of which about 85 crores is, I would say, are slow moving. We are receiving that payment, but gradually and slowly. Others are all good.
So what would be your debtor days be like going ahead?
See, debtor days, if you see on the basis of sales this quarter, of course, it would reflect that since the sales are down, so the debtor days have increased to, for the March, we have that 48, right? Whereas in FY21, Q1, those days have actually gone up substantially, because if you see the sales are down, if you go, you do that calculation on the data on the sales, the figure goes up substantially. In absolute terms, these are same. As such,
at ideal?
Sorry?
What is the ideal number we're looking at going ahead?
See, if we keep on doing the EPC business the way we are doing, ideally numbers would remain anything between 120 and 130 days.
Okay. Okay.
That is including the EPC business, because the EPC business, of course, the working capital cycles are longer.
Right. Okay, the next question was, I also want to know a little more on the telecom outlook. So with the 5G rollout, what is the, I just want to understand what was your outlook on that, and, do we see any prospects coming from this, because, they're talking about 5G rollout happening, they're starting it in 2021 and, somewhere mid next year also. So are we looking at anything in the pipeline where we would, benefit or get some orders out of this?
Okay, I would tell you one thing, that we have been working with Indus Towers for last 11 years since they were formed. Indus Towers was formed in 2009, and we've been working with them since then. In the month of July, Indus has rolled out maximum number of sites since inception. In last 11 or 12 years, July 2020 was the highest in terms of new rollout sites. And we at the same time supplied maximum number of towers to Indus in the month of July 2020. My point here is that the telecom rollout is on an all-time high at the moment.
Okay.
For 5G rollouts, there'll be two kinds of sites. One will be standalone sites, and there'll be non-standalone sites. Standalone sites which will be built only for 5G construction, whereas the non-standalone sites are the sites wherein already, where the towers are already there, which are using 2G, 3G or 4G technology. There'll be antennas coming on those particular towers. So right now what's happening is, if all the telecom operators, whether it is Jio or Airtel, they are strengthening their existing network on 4G. So the maximum rollout which is happening right now is for 4G. But as I said, there'll be a lot of towers out of these towers which would be used for 5G rollout. Plus there'll be a lot of infill sites between these towers which would be required for the seamless operation of 5G.
Okay.
So my personal view on telecom, for many years I've been asked this question, how telecom is going to, is the recession that you look at telecom. Telecom has always been my favorite sector. And though it is uncertain, I not to give you figures right now, or I would rather even say that the expert in the field would not be able to give you any figures that what it's going to be like in next 1 year or 2 years. But yes, there is a lot of positive activity which is happening in the telecom sector. And it's a very good time for telecom overall. As you can see, even for all the telecom operators, the ARPUs, the average revenue per user collection is increasing. Right? Had the pandemic not been there, probably they would have raised the call charges again, in the month of June, which I'm sure that they'll do in the month of December or somewhere, which would take their ARPs, up by at least 30 to 40 rupees per month, which is a big windfall for all the operators and gives them an edge to, roll out new sites.
Okay.
Yeah. Does that cover your question, or you want some more clarity?
Yeah, that does. Yeah, that does. So I just wanted to, on this point, if I could, are Huawei and all Ericsson also players in this space?
Sorry?
Are like Chinese companies and all also players in this space?
No, see, the Chinese players are in the business of supplying the electronic equipment, not the structures. We are the structure suppliers. Okay? Whenever you want your antennas up in the air, you need a tower. You need a structure on which the antennas could be mounted, right?
Right.
So whether it's a Chinese antenna or it's a European antenna or American, they need a tower. They need a structure wherein they can put their antenna up.
Okay, I see. Okay.
So, yeah, we are basically, like for digging a gold mine, you need a shovel and a bucket. So we are basically providing a shovel and a bucket, to put up the structure. Yeah.
All right. So no competition on that end from China at least.
No. There never was actually.
Okay.
It was only during 2010-11 when they tried to import some towers from China. But beyond that, nobody had actually, imported towers from China in India. Yes, we have a competition from China in the overseas market. But even there, we are getting preference now as Indian suppliers because of the anti-China sentiment all over the world.
Right. Okay.
Yeah.
Fine. I think that's all. Thank you so much for the time.
Thanks. You're welcome.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I now hand the conference over to Mr. Agarwal for closing comments.
Okay, if there are no questions, then I would like to thank everyone for your participation in our Q1 FY21 earnings call. In case of any queries, you may get in touch with our IR advisors, that is Pareto Capital, or you can feel free to get in touch with us. And we look forward to interacting with you in our next quarter at the same
Mr.
time.
Agarwal?
Thank you very much. Yeah?
Sir, just one question.
Thank you, everyone. Thank you.
Can I?
Yeah.
Mr. Kapesh, please go ahead.
Yeah. Hi, sir.
Yeah, Pritesh.
Sir, what we have seen, in FY19, there was a huge order by the, Jio, and then there is a slowdown in the order book from there. So that's why we see the dip in FY20.
Correct. Yes.
So apart from, if you sideline the Q1 results, what is the key lever for the next 9 months, seeing your order book in hand?
See, in terms of the guidance towards the top line, you're saying, right?
Right.
See, as far as Reliance Jio is considered, as of now, they have slightly, consolidated their operations by selling out their tower business to Blackstone, and further, on the Jio platforms, they have brought in so many other investors. So the tower business from Reliance is not that much as it was on 18 and 19 as of now. Okay? It might come tomorrow. It might come in the next quarter. But as of now, we don't have a very good order book from Reliance. Neither do we have a very good visibility from them. But apart from Reliance, Indus Towers, Patel, and American Towers, we have very strong visibility. So part of the ground which we have lost because Reliance Jio last year has been covered with Indus and Bharti Patel sales, right? And the export sales in this quarter. Going forward, if everything goes well, there's no surprises as I said, then we expect, to produce at least about 15,000 tons of structures every quarter, minimum, 15 to 16,000 tons, and which can be converted into the value yourself. And I would not like to give a definite number of this because of the opportunities due to COVID and all those situations. And apart from that, we can assume that we can get an EPC or revenue of at least about 100 crores in this year.
Okay. So what is the EPC revenue in Q1?
EPC revenue in Q1 about, I'll give you just give me a number. 16.5 crores.
Okay.
Manufacturing was 46 point something.
Okay. Got it.
Yeah.
Mr. Kalpesh, any more questions?
Thanks. Yeah. My question is answered. Thanks.
Yeah.
Thank you.
So, thank you everyone once again for your participation. And we look forward to interacting with you again next quarter. Thanks, Stephen. Thanks, Pareto. Thanks, Pramodji. And thank you very much, everyone.